Hello friends, welcome to OAVA's weekly update on money and markets. We begin with news on actions of global central banks. During the week, the US Federal Reserve at its scheduled policy meeting kept key interest rates unchanged, leaving the Fed funds rate in the range of 5.25% to 5.50%. Rate projections show that policymakers still see higher rates till 2025, and thus the Federal Reserve expects rates to remain high for a longer period. The policymakers' inclination to keep rates high for an extended period suggests that they remain concerned that inflation might not be falling fast enough towards their 2% target. Moving on, yet another global central bank, the ECB, that is the European Central Bank, decided to raise key rates by 25 bips during the week. Accordingly, the interest rate on the main refinancing operations and the interest rates on the marginal lending facility and the deposit facility will be increased to 4.50%, 4.75%, and 4% respectively, with effect from 20th September 2023. This is the 10th consecutive hike as the ECB continues its fight against inflation, which is seen to average around 5.6% this year, much higher than the tolerance zone. It is expected that ECB may maintain rates at this level for a sufficiently long duration. Moving on to key economic news on the domestic front, S&P Global has revised India's FY24 GDP growth forecast to 6.6% compared to the 5.9% projected in August. However, S&P has also revised the inflation forecast to 6% in 2023. The reason for the upward revision was the recent GDP data for April to June 2023 quarter, which came in at 7.8% year-on-year, supported by robust domestic demand. There are risks to the growth forecast though, in the form of higher oil prices and chances of a major El Nino weather event, according to S&P Global. Moving on to news on the currency front, this week the rupee closed at its lowest level against the dollar in the foreign currency spot market at 83.27. Rising US yields, higher oil prices, and high domestic inflation are said to be the key factors. Key concern was also due to oil prices inching towards the $95 mark in international markets. This can lead to higher current account deficit and lower balance of payment surplus for the Indian economy. And although India remains one of the fastest growing countries in the world, higher interest rates for a longer period in the US and other developed economies may not allow any significant pickup in capital flows. Finally, we end with some positive green news. The sales of electric vehicles in India across categories 2, 3, 4-wheelers and buses have crossed the million unit sales mark in FY 2023. According to the data shared by the Society of Manufacturers of Electric Vehicles, SMEV, an industry body representing the Indian electric vehicle industry, sales in FY 2023 were 1,152,021 units. This does not include sales of low-speed electric 2 and 3-wheelers. According to SMEV, the total EV sales constitute only 5% of the total vehicle sales in terms of adoption in FY 2023. So India still has a long way to go to making transportation greener and pollution-free on our roads. Supply chain issues for critical components and issues in government subsidy scheme are the main reasons hampering growth. That's it for this week. See you next week.